Hi guys, this is Erica Simonavice with the Robby Brady team at Tate Realtors, and I am with our local mortgage expert, Miss Dani Easter.
Hi guys, Dani Easter with SWBC Mortgage. I am a loan officer here and the branch manager in Greenville, in our Greenville office. We're looking forward to talking to you today.
Yeah, so today we're going to be talking a little bit about renovations, and mainly the things you might need to get done if you're ever looking at selling your home, whether that's in 1 month, 6 months, 1 year, 5 years, 10 years down the road. It can be scary, especially putting in some money to your home. Lots of people do not like to do it right before they list. So we do always encourage people to kind of talk with us early on, so that they're able to enjoy some of those renovations, especially because it's a whole lot of hard work that goes into them. So we're going to talk a little bit today about renovations, why you might need them, when's a good time to talk about them, and then we're going to bring Dani in to talk a little bit about the ways we can finance them, because a lot of people don't have necessarily a huge stack of cash lying around, or not necessarily money set aside for this, even though it's one of the most important things in order to get the most out of your current investment that you're living in. So we want to get you the most return on that huge investment that you have been paying towards for the last however many years. So I am going to go ahead and share. So one of the main things, if your kitchen looks like this, or let's see, or like this, we probably need to talk. So the main thing we want you enjoying, and a big thing is the kitchen. Most buyers are looking for a kitchen. They're looking for the open concept. They're looking for light and bright right now. The oak cabinets, not as in style right now. They're looking for that light and bright. They're looking for the dual pane, the dual colors. They're looking for that open shelving, gas fireplaces, seating. They're looking for, again, that off color. You're having those huge island, lots of counter space. Lantern fixtures are really big right now. So understanding what buyers are looking for and potentially will be looking for the next few years, can really help you understand, and get the most out of your money. So either if you're looking at doing a renovation now, or you're looking at selling in the next few years, it's a really good idea to maybe start thinking about it sooner than later. So Dani's going to go into a little bit about what options you have in order to finance some of those renovations.
So the good news right now is in our market, South Carolina, Erica, values on houses they're up. And so they're selling for a premium, which makes everybody's house across the board worth a little bit more. So there are several ways to finance or get some money to do renovations. One is to do an equity line. At that point, you're taking the equity out of your house and using it, and you end up typically with two mortgages, two payments. I have a lot of people that don't want to do it that way, but it's an option to consider. What direction most of us go in is there are two actual home loans that you can choose from that are called renovation or home improvement loans. The more popular of the two is what's called a 203K. You hear about this one a lot. The benefit of the 203K is we will go in, and if you own your house now, we will take your current mortgage. We will take whatever you think you need for renovations. Say you want to spend $25,000, and we'll add that balance owed of, and I'm going to use some numbers. Say you owe $150, you want renovations of $25. We're going to do a new loan for $125,000. At closing, though, we're going to set that $25,000 aside, and your builder is going to go in, or your contractor. He's going to do repairs, and he can now take monies against that money that we've set aside up to that $25,000. But when everything is said and done and you've got this new beautiful kitchen, or you've painted everything, or done a new deck, or redone the heating and air system, whatever it is, you're going to have one mortgage payment with one term with one fixed interest rate. The reason the 203K is so popular is the minimum amount for the renovation can be $5,000. The maximum amount can be, typically it's up to about $100,000, but it's actually 50% of whatever the value of your house is. So there is some little rules in there, but think of it as $500,000 to $100,000. And that's a government-backed loan. Minimum credit score is like 640. Don't have to have, but a little bit of equity in the house to qualify. We have to have enough equity to cover whatever repairs you want to do, but doesn't require a whole lot of equity. Loan does have mortgage insurance on it. That's why you don't have to have all that equity. And because it's a government-backed loan, we are going to bring in a government appraiser and what's called a government compliance inspector. And what's going to happen between those two people is they will determine a little bit, what are you doing as repairs? Is it going to add value to the house? But is there anything you're not doing that needs to be done? So let's say they determine your roof is older. They may come back to you and say, hey, part of this project, we've got to add a roof. But that way you'll know moving forward, there probably wasn't any life expectancy left on the roof. It's rare something like that happens, but that is the duty or what that person does. There's also another program that's backed by Fannie and Freddie. It's not government backed. It's in the conventional version of loans. You have to have more equity to qualify for that. But your project can be up to 150% of the value of the house. And a conventional loan goes up to 511,000. So you could conceivably do up to a $250,000 renovation on your house. So that's pretty cool. Again, builders, we close on the loan, builder starts their work. They're given a 60, 90, 120-day period to build. They take draws against those monies, and you just have your regular house payment and 30 years in fixed. Or you could choose a 20 or 15, and you move forward. And so you can have all those things that you want. You can update, upgrade, and in today's market, if you take a kitchen like you were showing earlier and you upgrade it to something that's much newer and fresher, you may have spent $10,000 to do the upgrade, but as you can tell the customer, you may get $20,000, $30,000, or $40,000 in return value because of what the market wants for that minimum upgrade. So it's worth looking at doing. It really is.
So Dani, I'm sure you'll agree too that when someone's looking to do some renovations, we do see that maybe sometimes they go in a wrong direction, or they do some upgrades, but maybe it's not quite enough for the neighborhood or not quite enough for that. So really talking with your local real estate expert along with your mortgage expert to help finance that is really going to get you the most out of all of this work that you're putting into it.
Correct. So 203K is a great way to get a new heating and air system because they are expensive. But from when you go to sell that house, you have to make sure that you have a few other things to go with that, because it is assumed that any house you're going to buy will have a heating and air system that works. So even though you may spend $6,000 to $16,000 on heating and air, it doesn't necessarily make your house worth that $6,000 to $16,000 more. So we've got to make sure that whatever we're doing will add that value to the house, or we've got to make sure if we're adding a big ticket item like a heating and air system that's not adding, value dollar for dollar. It does add value. It's just not dollar for dollar. That maybe we've painted, maybe we've done a few things on the front door, maybe we've added some new flooring here or there so that it gives the rest of the house that pop, so that when you go to sell it, it's actually worth the $16,000 more or whatever you had to spend on the heating and air. When you go in and add hardwood floors, Well, they add, you could spend 5,000 on hardwood floors. They add more than the 5,000. So there are things that add value dollar for dollar, and there are things that are not. So you need that expert. You need the mortgage person's input from the price point, and you need the real estate's input from what's actually selling on the market and what needs to be in that house. So that, because the other thing is, you really can't sell a house with a heating and air unit that's not working or that it's on its last leg. You need to address it before you list the house.
Goes over much better that way. And now, as far as the loans that you were discussing, are these fixes that a homeowner can do themselves, or does this have to be done through a contractor?
Very good question. So we do not let the homeowner do repairs themselves. We want a licensed contractor that's going to give you an accurate bid, and we do vet these contractors. We make sure they have, done this type of renovation before, or this type of repair before, or that is what they're licensed in, because we want to make sure that we're trying in some way to protect you, the borrower, or the customer, from making sure, you don't get a quote that's not realistic, and then they get in, they do half the work. Now you don't have enough money to finish the quote because they've gone up on pricing, and the loan, remember, closed up front. So no way to get more money down the road. So we do vet those contractors. We do want the repairs done by a licensed contractor. We do not want you as the individual doing those repairs.
Perfect. And these are options as well for those first-time home buyers that are looking to maybe do some renovations, correct, as well as current owners who are looking to do renovations in order to sell or in order to just improve their home, correct?
Correct. So a 203K or a home style loan, you can do as when you get ready to buy your new house. We can roll it all in, get that contractor up front, do that loan, you close, and you've got the money to do the repairs. Or this is something you can do on an existing home that you already own. We go in, like I said earlier, we refinance you, basically put that money aside. And on both deals, we're going to appraise the house as if these repairs are done. And so we have some idea of what the house is going to be worth after you make these changes as completed.
Perfect. Well, great. So main things with this, make sure you're working with both your local real estate expert and your local mortgage expert. They're going to be the ones to help make sure that not only are you doing the right things to your home, but you've got the right contractors in that are helping you to do them, and you're working on the right mortgage program for your specific needs. So if you're in the Greenville-Spartanburg market, if you're in South Carolina, we'd be more than happy to help. I would also be more than happy to help get you with a local real estate expert that works in whatever market you are in. So the contact information will be below in the notes. If you guys have any questions on that, feel free to reach out to either of us. And thank you so much for your time today. We appreciate it.
Thank you. Have a great day.